And that is exactly what we are going to be talking about. But it's a very IPO heavy week as well, Reema. We have spoken about how IPO lineup has been very strong. This week we have Swiggy. Tomorrow we have an energy IPO which is coming up, the Acme Solar IPO. Then we have
today the Sagility India
Sagility
IPO
India.
And this is a PE owned, 100% PE owned company.
So the lineup continues, right? So let's talk about the primary market action as well. Several big IPOs are expected this week, from quick commerce giant Swiggy to insurance provider Niva Bupa. But how has the performance been of some of the biggest IPOs so far? We discussed these trends with Anoop Vijaykumar of Capitalmind Financial Services. Anoop, good morning. Thank you so much for joining in. Well, you have an interesting report which you've put out. Can you take us through the synopsis of how some of these big IPOs have performed so far? And I believe the report is only till 11th October. So some of the bigger ones like Hyundai wouldn't be there.
Right. So thanks for having me on the show. So yeah, essentially our objective with that analysis was to look at the overall IPO landscape and see how historically IPOs in general, and then specifically large IPOs have done. So, I mean, just as a data point, over the last 20 years, there have been over 1,000 IPOs. And we sort of classified each of them into three buckets. One was the ones that gave negative returns, and then the ones that gave positive returns, whether they managed to beat the CNX 500 as the index benchmark. And what we found that overall across the universe of IPOs, roughly about 50% of the IPOs have managed to beat the broader benchmark index. Out of the remaining, roughly 30% have been negative, have been negative, and then the others have given positive returns but have not quite beaten the index. But then, interestingly, when you shift the focus to the larger IPOs, and we looked at the top 30 as a sample set, the odds kind of change a little bit more, rather unfavorably for the investor. Roughly 40% have beaten the index, the CNX 500. The remaining 60% have not. So, and out of those, 30% have been negative, 30% have been positive, but have trailed the index, given roughly half the returns of the index on an annualized basis. So it looks like the larger IPOs have tended to, I would say, disappoint in terms of giving long-term returns. And we've kind of focused on long-term returns in this study, as opposed to just looking at the listing gains or the short-term returns out of these IPOs.
Anoop, you also go on to say that most late-stage bull markets are characterized by a few large IPOs, which tend to be valued optimistically. So given what we've seen and the sort of tepid performance of the large IPOs, do you think we're in this late stage of a bull market? What does history and analysis tell you?
So it's impossible to call the top of any bull market, but then any bull markets that's been in place for the last 1 or 2 years, you could consider that to be sort of a mid or late stage of the bull market. And from what we've seen, typically large IPOs tend to come out once we've seen index highs for 1-2 years consecutively, which is what the case is currently. And maybe that is one of the reasons why they tend to be priced quite aggressively in terms of valuations to multiples to earnings, etc. And once that happens, there's very little margin for error for those companies when they report their results subsequently in the next few quarters. Any kind of moderation in growth tends to get punished by the market. So that is, one hypothesis on why large IPOs tend to struggle to give decent returns.
I know we have been talking about Indian markets and the big IPOs here, but is there any comparison as to how they've done globally versus the bigger IPOs, of course? Our pipeline is much stronger in terms of the number versus, say, what's happening in the US. Is it a global phenomenon where the bigger IPOs do not do as well?
So interesting point that you make about India being a small portion. Now, in general, India has been a fairly small portion of the global IPO pie. But if you look at 2024, obviously the top place goes to the US, where they've done over 40-50 billion in terms of IPOs. But India is actually second place when you consider all major markets in terms of the sheer value of the IPOs that have been done. Over the last 2 years, we've seen over 370 odd IPOs. Totaling to about $14 billion US, which is quite significant given the overall size of our market. So to your question about global markets, that tendency for IPOs to cluster around bull markets once they are well underway tends to persist. So whenever you see a bull market's been in place for a year and a half, 2 years, is when a lot of these IPOs tend to come out, which is logical given that that's a favorable environment in which promoters want to sort of sell their shares to the public. It's just that from an investor's point of view, they might not necessarily be always the best stocks to be owning for the long term.
Have you done any analysis of the mid-size, IPOs and how they fared? And is there any trend that you'd like to call out?
Overall, I would say the offering size seems to matter. Offering sizes of which are relatively smaller in the 2,000 to 3,000 rupee range, or 2,000 crore rupee range in terms of offer size, have tended to do better compared to the ones that exceed like 5 and 10,000 crores. If you look at our top 30, I think our 30th would be probably First Cry, which was about a 4,000 crore IPO. So our IPOs are still not massive in terms of if you were to take the global context. It's only now that we're seeing some of the really big IPOs, but I think it's more a function of when these IPOs come out as opposed to their sheer size that often tends to drive the returns that they deliver. Even amongst the bigger ones, we've seen some fairly good returning IPOs in the form of Zomato. Coal India, which listed way back in 2010, has done reasonably well for investors if you were to compare it against the benchmark index. So, and it really is a function of the size as well as the valuation that they come out at, and that tends to be slightly aggressive in late stage bull markets.
Okay, size does matter. Thank you, Anoop, for joining in with the analysis. Okay, get into a break, but as we do that, we'll get you some good news. Now, Network 18's Money Control, which is India's leading digital financial platform, has achieved the remarkable milestone of surpassing 10 crore unique visitors in October of 2024. Now, according to data from Google, this achievement further widens Money Control's lead as India's top business and financial news platform.